Welcome back. Now to our next conversation. We see Kenya is raising $900 million in planned external commercial financing for its fiscal year to June from international banks, according to the finance ministry. Well, like other frontier economies, the East African nation has found it's almost impossible to raise funds from international bond markets this year. Let's talk to Matt Kindigan, our practice leader, Sub-Saharan Africa at Frontier View. Great to have you, Matt. Compliments of the season.
Good to have. Well, thanks for having me on the show, and also compliments of the season to you as well.
All right, Matt. So, what does this tell us about the state of public finances there?
Well, in Kenya's case, the fact that the government has struggled to raise financing on international bond markets suggests that public finances are not great. And this is a problem that many emerging market countries, including in sub-Saharan Africa, are struggling with at the moment. It's worth remembering that Kenya actually rode out the COVID pandemic relatively well, and this is because of plummeting global interest rates and also because of support from multilateral institutions like the World Bank and donors. But now the Kenyan government is facing increasingly significant pressures across a number of fronts. The first is that investor and lender sentiment towards emerging markets, including markets like Kenya, where debt to GDP ratios are quite high, the budget deficit is persistently quite high. Sentiment towards these sort of countries has dwindled quite significantly as the global economy has slowed in the face of the war in Ukraine and rising inflation. We're also seeing sharply rising interest rates globally, and this is raising the cost of governments like Kenya servicing its debts. And these rising debt servicing costs are being aggravated by the depreciation of the shilling. So when the government is trying to service its debts in US dollars, it's becoming a lot more expensive. So certainly we are expecting the government to face quite significant fiscal pressures over the course of next year. We're not expecting a default like Ghana, as we've seen over the last week or so, but certainly probably a more severe fiscal adjustment than most people are expecting over the next 6 months.
All right, all eyes still on Ghana, at this time. But how would what's going on with Kenya now? How would that affect the Kenyan shilling?
So our view is that the shilling remains overvalued, and this increases the risk of a sudden or sharp depreciation over the course of 2023. We have seen the central bank try to stabilize the shilling or prevent the shilling from depreciating very significantly. There's a bit of a crawling depreciation at the moment going on against the dollar. But our view is that it's not depreciating fast enough to relieve the current account pressures that the country is facing. This is being driven by the fiscal difficulties. And we've also seen the emergence of an increasingly vibrant parallel currency market in Kenya as a result of shortages of foreign currency available through official channels. And so certainly this is all signs pointing towards a more severe depreciation of the currency. Our base case view is that we're probably going to see a continuation of the crawling peg, maybe a slightly accelerated version of this over the coming months, with the shilling reaching about 130 per dollar by the end of 2023. But we have an increasingly likely downside scenario that could materialize, which involves a very sharp, sudden, and quite extensive depreciation of the shilling over the coming months, especially if government finances are not consolidated. So if the government resists austerity measures over the next few months, or if the parallel market becomes a lot more vibrant, if the parallel rate depreciates very significantly. So base case view is some more depreciation, relatively steady, although there is an increasing downside scenario of a very sharp depreciation against the dollar.
Yeah, and how do you see the Kenyan economy performing next year?
So despite everything that we've just discussed, the Kenyan economy is actually still relatively buoyant. So it has defied expectations by growing very well, at least during the first half of 2022. The growth outlook will slow, in our view, and this is partly a result of weak public finances. Government spending and investment are a very important part or a very important driver of economic growth in Kenya. But we actually are seeing an incredibly resilient private sector, especially services industries, doing exceptionally well in Kenya. We're seeing double-digit growth in industries like healthcare, hospitality, ICT, financial services. And this is very good because it means that the country is not reliant on primary or secondary industries for growth. That said, we are seeing weaker activity in manufacturing and construction, and also the agriculture industry is really struggling in the face of the drought. And if we do see the government forced to introduce very severe austerity measures, over the course of the next 6 months, we could see growth slow even further. Our base case view is that the economy will grow by about 4, maybe 5% in 2023. And a downside scenario where the government faces increasing fiscal problems, we're probably going to see growth of about 2 or 3%. So not great by Kenya's historical standards, but not necessarily that bad by global standards. So still relatively upbeat for the next year.
All right, I guess that's good to know, and we'll definitely be tracking that economy going forward. So Christmas this weekend, what's it going to be, Matt? Is it going to be chicken, turkey? What's the plan?
Well, yeah, I'm going to my parents, and they actually have a capon chicken, which is a slightly bigger version of a chicken, halfway between a chicken and a turkey. So I'm looking forward to that.
Fantastic. Thank you so much, Matt Kendiga, Frontier Lead there, Sub-Saharan Africa Practice Leader. Thank you so much.
Thank you very much.